right, Luke, we just spent some time in Zurich together at the SMI where I'd asked you what the sentiment there was, and you did not like that question, probably because you can't really put sentiment into a list. So I'll skip asking you the sentiment question here again today because we're actually talking about a couple of interesting stories with one overarching topic, if you will. And we'll start off with Q2 Metals, which has given back some of the gains that it made over the recent months. We've talked about it multiple times, and now it's down over 40% from its 52-week high. Even though they have had good results, it looks like it's a great discovery geologically, yet the stock is going down. And you have an idea as to what might be driving that. So what is it? What's going on here?
Yeah, it's a bit of what we already discussed before. At the time, the stock was probably at $1 or something, $1.10, and it went to $1.50 on the back of a very big discovery, I think. I didn't recognize it. Well, I did recognize it, but I didn't recognize it enough to buy it, as I explained previously. And some other people did well on it. I think we warned a little bit in that episode of all those shares coming free trading, and that's what's happening right now, I think. And you can never really put it into one box and completely with certainty say that this thing is going to top very soon. The dynamics are too complicated to completely know what happens, but when you see warrants being repriced to 60 cents in June, almost 13 million warrants, and you see two financings closing, and knowing that in 4 months' time they will be free trading, those financings also have warrants included. Those are both free in about 1 or 2 weeks. And in most cases, you see that effect a month before the free trading date. So you see a bit of selling already, perhaps people going short. And you have those vendor shares that were issued for the property. The first set of shares, 20 million shares, were free trading also within 4 months. So what we did discuss previously is that all those shares in a pretty short period of time become free trading. And that's, if I very quickly count 20 million vendor shares, 10 million shares, I think 25, maybe even 30 to 40 million shares, if you include the warrants, that need to be absorbed by the market. And the TSX-V is very low liquidity the last number of years, and ASX is higher liquidity. So if there's not enough demand for those shares, even though it's a big discovery, then you will see some weakness. I've made maybe mistakes by not buying big discoveries because of those situations, like Hercules Silver at 30, 40 cents. So sometimes you get the liquidity and the stock really pushes through those layers of shares, but I always see it as a concern, and I think right now that's what's happening. Even though I didn't change my mind on this probably being a very big discovery. There may even be a bit of financing risk, maybe also a bit of no news risk, because it will take a bit of time before the next drilling campaign can start. So I think I'm not skeptical about the company future, but I'm just saying that it's not impossible that, or probably likely that, all those shares, and for sure the vendor shares, but also the financing shares, will be free trading soon, and giving some pressure on the stock.
The thing this goes to show that not a lot of people, and I like to believe this is the case because I'm one of those people who typically feel, I focus on a story. I don't necessarily focus on the dynamics of the underlying equity itself, where I'm thinking about the supply and demand dynamics of the shares. I want to focus on, is it a big discovery? Do I like the team? Is their IR doing a good job? What is the spend? And all these things that kind of make up the company. But essentially what makes it or breaks it, it seems, in a lot of these cases, is the supply and demand dynamics of the equity. And that's something that I've learned from you. And I think you mentioned financing risk and no news risk. Those are two risks that we've touched upon them before, but they're maybe worth repeating here. So what do you mean by financing risk and no news risk?
Well, of course, you don't have to call it a risk if you are, if you trust a team, you know this team, and you have seen the discovery, you've done the work on it, and you have confidence in both the team and the project going to deliver. You don't have to perceive it as a risk. I mean, you can just accept volatility as we always have volatility. You can see it as an opportunity by buying more. So it's not necessarily a problem. But if you are a little bit more of a trader, or maybe you're not so confident because you don't have the ability to evaluate all those drill results, like perhaps geologists following the story can, or people like Rick Rule with analysts that he pays to do the work for him, then I think you could consider it a risk, because this stock could be weak for 6, 7, 8 months, and if your mental game is not going to take it, if you get worried and you cannot deal with 6 or 7 months of weakness. I'm not saying that will happen here, but that could happen. Then maybe your conviction is not high enough. So to keep a stock also in weak periods is not always easy. I think especially people new to the business. But even if you are in it for a number of years, it could give you doubts about your being right in this story, and perhaps you're going to sell at the bottom just before the thing goes back up again. There may not be a lot of news in the next 6 months because of no drilling. On the other hand, it is a big discovery, and maybe bigger parties are looking at this company and thinking this is a good project to invest in, or perhaps even take over very early. Then, of course, you could also get good news from an investment if suddenly Rio Tinto invests or something of that to that nature. This story could, just continue again. So I'm not saying that it ends here or it will end for 6 months, but it is a risk in my mind if you do a bit of trading, or you consider this a little bit of trading opportunity rather than just being long for 2 years and see how it plays out. Because if that's your strategy and you really trust the team, I don't think it's necessarily a risk. It depends a little bit how you play this market.
This is actually a very good point that comes closer to part of Rick Rule's philosophy, right? Where he asks essentially 3 questions. He's going to ask the company, what is the unanswered question? What are you trying to solve here? How much is that going to cost you to answer that question? And where exactly will the money come from? There's this funny clip that I believe you've shared where one guy told Rick Rule, not knowing that it was Rick Rule, the guy told him, oh, there's this broker in Vancouver. His name is Rick Rule, and he's going to finance me. Then Rick Rule kind of pulled up his ID and showed him he's Rick Rule. But point being, he wants to know that, obviously, he wants to know that the thing is financeable, but also partly because he wants to know what dilution size you can expect, both on a shares outstanding basis as well as a fully diluted basis. So when I'm interviewing companies and I ask them, how are you going to finance it? What are the creative ways out of just straight equity? Not all CEOs seem to understand why I'm asking that, or appreciate being asked that question where I'm asking, how are you going to do that financing? Walk me through a typical financing. Is it half a warrant? Is it 3 years? Is it full warrant, 5 years, no warrant? How are you going to do that? So again, going back to the supply demand dynamics of the shares, that's really what I'm going after. And that's something that I've really learned from you. Really, it's something that I didn't used to think about. So I think you deal with it best.
Yeah, but depends a little bit on the story as well. If there's a company and something happens, some event that suddenly makes a project financeable, a discovery, but it could also be a big gold deposit in a very difficult country, but the country is improving, and somebody smart, and I mean the easiest name to mention is Lundin's, because people immediately will notice, hey, this is a game changer. Then then a company like that could do very well, even though if there's many warrants outstanding. I do remember ATEX. I think there were quite a number of warrants outstanding, but Pierre Lassonde invested at 14 cents, and suddenly problems disappear. So it's not always a problem, but especially in these low liquidity companies. I mean, this one is a real discovery, so it could mean that the warrants only give a bit of temporary, or the vendor shares give a bit of temporary pressure, but it will continue back again. And companies like this can go up 20, 30% on the day if they have some good news or some new liquidity. So I'm not suggesting this will not work. I'm just, saying that we discussed this before. It is not a complete surprise to me, but it doesn't have to be a game changer. In very small companies where you're really playing a, perhaps a drill hole, or it's a land package play, or whatever reason you own a company that is only a couple of million shares, a couple of million market cap. Those companies it's even more important, because they are not likely to drill a big discovery very soon. They're still in a very early stage, and can their positive results, but not amazing results, a soil sampling program outcome or a geophysical survey program with a positive outcome, can those outcomes give the share price a bit of a bump, and a higher share price leading to a new financing at a higher price, and slowly building, a share price and cost of capital. In those stories, it may even be more important than in this big discovery that they made this year. So I think it depends really on the type of story. I often play these type of companies where for me it's very important not to have too much against the share price and try to give it some room to move in case of positive results. And because how often do you see a really big discovery? 3, 4, 5 times a year. And how often do you see a really big investor suddenly show up in a small company 3 or 4 or 5 times a year? So except for those 10 names or 20 names that are doing very well, I'm trying. If you're not in those 10 names, it's nice to still do well if there's some positive results. And if you have this number of shares against you without a discovery, it's, as I said before, almost impossible to see a share price move in this low liquidity market.
I'm also reminded of American Eagle, who, by the way, I interviewed when I was in Frankfurt. So I'll put the interview right on the back of this conversation here with you, Luke. But they had gone to a high of 83 cents really in the spring, in May. And then the stock started giving a lot of that back. It almost fell 50%, right? So it fell to 42 cents, which is almost half the share price. And then after that, things started going back up again. They announced the participation of their big investor that you mentioned. Now that's what they're getting, but those stories are not that many. And so again, it goes back to what you said earlier, is that if you trust the team and they are going to handle it well, even if the supply demand dynamics of the equity are not ideal, it is still fixable, so to call it. Maybe not fixable, but you can still have a success even if the supply demand dynamics of the equity are not exactly perfect.
Yeah, if I look at that chart right now, it has a more, often the companies I am in, they have this very erratic behavior, and American Eagle seems to have a bit more volume, and it can take that volume. And I'm not exactly sure about their warrants, but it's still a very good chart. But that's based on a real discovery and people, doing their work on it and buying. I don't know what happened recently in August or something when its stock dropped for 30% almost. It's still a very normal chart for a big discovery. You see these drops of 30, 40%, or sometimes even 50. Even in the big discoveries, because of Snowline recently had a bit of a bad time when the other mine got the Victoria mine got trouble, and then suddenly people sell for a very short period of time, and other people make use of it. And not sure what happened with American Eagle a couple of months ago, but apparently it was an opportunity. And this is a more advanced name with a developing discovery, and in those cases, those problems are certainly fixable.
If I remember correctly, they raised some money. I think it was close to $10 million is what they raised, maybe $8 million, kind of guessing at this point, but they raised about $8 million sometime around May. And then they started their, I believe, phase 3 drill program on the back of that. Right. And so it started moving that way. And then most recently, again, that's something that Tony and I will be talking about. But 2 weeks ago, they announced a $29 million strategic investment by South 32. And that's part of that bigger investment. You do have other charts, though, that are also interesting, look way different, maybe have gone through multiple of those cycles. This next one that you have on here is Fox River. I really know nothing about it, but by the looks of the kind of the bullet point things that you've written down, it looks very interesting. What's going on?
Yeah, I'm gonna tell that to you, but I'm just looking at American Eagle, and I'm just seeing that the financing closed, your 8 million financing, mid-May, and the drop in share price occurred in August, September. So that's a month before that financing became free trading. So perhaps that was the reason. That's the only thing I can see a valid reason of the stock really tanking this quickly. But that's me not knowing too much about the story, but the timeline confirms that thesis. But maybe there's something else. yeah, on well, Fox River is not even a company I know that much of. I know it because of Dave Lotan. He has invested already for a long time. He started buying at probably 5 cents, and I've never been, minerals like phosphate are not really things that I think about a lot and never invested, even though I know that Dave was taking a position and increasing his position by his SEDI filings. The only thing I want to say based on this company and the chart as well is they have a deposit, and that deposit may not be of interest in certain markets, but maybe of interest in other markets, right? If the interest in phosphate is not there, the story can trade at 5 cents. And in the meantime, they did a PEA. I think the PEA was good, but it was not the catalyst for it to go up. It was actually, pretty close to the thing dropping down again. So I think if you have an asset that you believe in, but the market is not there, and you treat that company very well, and what I mean with treating the company, the vehicle very well, is thinking properly about financings. Because in the financings, I really consider as a risk because you give away shares. Who are you give them to? What will they do with it over the next couple of years? And I think if you treat the company well, you think well about who are you going to give the paper, how much are you willing to give away, how much do you really need, and you treat the vehicle well with the proper assets that's sitting in this case, this phosphate deposit, um, these things over time will do well. And I think a lot of companies do not treat the entity well by issuing warrants and warrants and warrants. And when the day comes that phosphate, in this case, um, becomes popular again, and perhaps you see bigger companies taking over these type of projects. You've given the upside away, I think, in my mind.
Mm.
So I think a company like this one, and this is one where Dave Lotan has a level of influence, I guess, because he's the chairman and a big investor. Um, and I wrote a short summary here in this image for people not knowing the company. My story is really, if you treat a company well in terms of the vehicle, the shares, the warrants, and the way you control the company, a company stays alive, even after 5, 6, 7 years, and has a runway, and could become a 10 or 20 bagger for Dave if they sell it at some point at 50 cents or a dollar or $1.50, whatever is a reasonable price. And I think most companies cannot survive for so long. They have to do a rollback at some point because they have issued too many shares and the stock is too diluted to really make it work. So this is just an example, I think, of an interesting project that only in certain markets can be promoted well, and having the patience and treating the company well to bring it to that point.
Mm. And ideally, that's how it always goes, right? It's shareholder registry building exercise instead of just raising the capital or taking it wherever it comes from. But
Yep.
like you've pointed out in previous conversations, a lot of teams don't have too strong of a financing muscle on their own. And so oftentimes they just take the money irrespective of where it comes from, especially Canadian companies who deal with flow through and charity flow through and whatnot. Or whenever it's a bought deal, someone comes along and says, I can guarantee you $10 million or whatever it might be. If you have little to no financing muscle, you take the money because you don't really have a choice. Ideally, though, you do have a choice, and ideally, you build a perfect share registry with long-term shareholders. Although at that point, you also have to worry about liquidity and attracting new, funds and whatnot into the story. So I think maybe it's more complicated than what I see it to be.
Well, but as an investor, you have a choice. I mean, not all the companies are able to do this, and I think some companies have to rely on, a broker to get the money for them. And I participate in these financings as well if I really like a project. But I have learned over the years that just being an investor in a company that that the people behind it are able to properly treat well. Like Lara, I've got another chart with me here. I don't think that Lara had any very special event recently, as far as I can see it. Based on the chart, you have the impression that this maiden resource of the Planalto project was a trigger, but I haven't seen, something that's huge, like a big discovery and everything suddenly changing. But this company has done well, is a sort of a prospect generator, maybe a bit of a boring company, you could say. And still, look at this chart. Look at the outstanding shares from 34 million to 45 million in the last 6-7 years. Really treating the company well, making sure that work keeps that they're doing the real work. But if it's a difficult time, perhaps slowing down a bit, but making sure that the value you have in the company, that you also protect it and not just dilute it every time within 6-7 months, and thereby sort of destroying the company. So I think this is a good example of not even needing a big discovery or an enormous event for the company to do really well over time.
And Founders Metals is a good example again as well. We still have to. Your camera's off focus, by the way. Even your camera is kind of getting tired of listening to me, and it's almost falling asleep there. I can get that. But Founders Metals is a good example of a lot of things that went right. Not only the rocks being there and needing that part of luck, but the team doing everything correct as well. And so we do have to get him. I spoke to Colin, by the way, last week as well in Switzerland. So we have to get them and get Tom as well, maybe Tom Woolrich. Kind of reverse engineer that. We've been saying that for a while, so we'll finally do it. You do have a couple of other examples on here as well, 2 different charts essentially. What are we talking about here?
Yeah, the first one is Lavras gold, and I think the spike is interesting after the discovery, but most people can understand why it would spike. I think that the 2 years before that are interesting because you see this sort of boring share price pattern. But this is again a company, and they did a good deal. They sold the previous company, they spun out this company, and they also negotiated, I believe it was $8 million to be part of that transaction in this company. So they didn't have to finance for 2 years. And of course, the pressure was building because the financing day was coming closer, and they made a new discovery. And this allowed them to finance at $1.35, I believe, with Eric Sprott and Rob McEwen and a couple of others. So that sort of made it easier for them. But still, for 2 years, they didn't issue a share. They kept on going. They did proper work. Of course, the discovery made life easier for them. And since then, the stock is like 6-7x. And of course, part of it is also that they have pretty wealthy insiders that help the stock in difficult times. They buy in the market. Not every company has someone like that, which also plays a big role. But I find the 2 years in front of the discovery very interesting because they have also protected their value, the land package they have, and slowly, did their work and made a discovery. So the discovery almost works in any company, but you can see here that it works really well if you have a proper share structure.
And the insiders to back it up, just like you mentioned. I mean, it's just astonishing if you open the SEDI filings for Lavras. And I tip my hat to insiders like that. Maybe I don't understand the full story. I haven't followed it too closely, but this is just astonishing. Just on the 22nd, which was Friday, their board member bought $98,000 worth of it. On the 22nd, 21st, he bought 13, 21st, and again, he bought 12,000, 19, 99. He bought 1, 2, 3, 4. Oh, no, that's only the filings. Oh, yeah. No, their tax date 19. So 1, 2, 3, 4, 5. He bought 5 times during the day on the 19th. And that's just been going on for months, right? Which is, it again goes back to the initial point that we were talking about, which was understand the supply and demand dynamic of the equity. This is demand for the equity that's not gone away for months and months and months on an end, and clearly it's worked well. So, I mean, I tip my hat to that. I think they did they've done a great job with that.
Yeah, I should have activated the insider because this Resource 100 feature also includes an insider feature which shows you the green and red dots, and this one would have been green, full of green dots because of all the insider buying, not just by one director, a number of directors, but one in particular. And it's quite amazing. I mean, recently I haven't seen spectacular news like the one in August 2023. They have released good news, but nothing that sort of increased the discovery in size that much. But by having those insiders and properly treating the company, amazing job, and I hope they will make more discoveries and build this out into a very big company. But of course, a big success story so far.
Not something you can rely on every day though, but so that's why you got to stop and think about it and see what the history of directors and insiders buying has been. But again, that's not something that typically happens. That's why it's so, again, remarkable. And I don't have an interest, I don't have a relationship with them. And I but it's still interesting to see. What else? What do you have on here? We only
Well,
have a
another
couple of
one,
minutes.
yeah, another one is Globex, and I will keep this one short. But this is also, you could consider this as a boring company. They are not typically, they are not drilling for new discoveries. They option projects off. They find many projects. I mean, if you go to the website and you look at the number of projects they have, it's probably more than 100 or something, and they sell them to companies. They take a royalty. Sometimes they take shares or payments. In good markets, they sell things. In bad markets, they buy things. They option. They claim. They stake claims, and it's not that they every day have an amazing news release or insiders are buying every day. But you can see that with so many royalties they have been creating by selling certain projects for good prices in good markets, they have kept the company in a very healthy state. And with also bad years, look at 2022, it went from $1.70 to back to 60 cents. That's this market. But the company, nothing really went wrong with the company. I think probably a couple of shareholdings went down because they own some shares, I think, in public companies. But in general, you can see that the share price is still doing well. Just quite impressive. And not a promotional company, not a go-to company for most people. But still, if you treat the company well and you do proper work in it and you give it time, these things can survive bad markets and still give you a very good return, even if you're a long-term shareholder. When it's a little bit more a promotional play, and it's often pretty obvious when you look at presentations and the way people present things, those things do not survive several markets. Companies like this survive several markets. So I consider this a company, not a promote. I consider Lavras a company, not a promote, even though it has a bit more risk because it's a early stage project, one project, not diversified, but a real company thinking process rather than, well, silver is popular, buying a silver name, putting a big silver logo on it, pay a lot of promotion, see the stock go up. Those things typically do not survive unless they find something. So that's a little bit my story today. That these sometimes boring companies are safer to invest in than the promotes, but the promotes will probably do better in a good market.
That's it. Thank you. That was a very good overview. Let's listen to American Eagle's CEO right now about that deal that I told you about. All right, moving on, Tony. We have a lot to talk about today, so no time for pleasantries. But I am actually looking forward to speaking to you. So happy to have you here. Thank you for being here because you did an almost $30 million deal with South 32 about 2 weeks ago. Interesting part, many interesting parts to the story, but there's no ROFR, there's no warrants, there's no fees. They're not taking a board seat, but the deal was still done at a premium to market. So I want you to talk to me about that deal and really specifically about the why, and even more specifically about the why now of it all. So take it away and walk me through it all.
So going back to the genesis of the deal, South 32, these things don't happen overnight, as I think most would know and assume. They were in a data room for about 5 months. They were at site. I think they actually went twice. I believe the second time they were at site, we were pulling hole 35 out of the ground. So they got fresh visuals of that hole. And again, we're still waiting for assays for that. And I think from their point of view, they saw a ton of potential at NAC. We've had really successful drilling results over the last 2 years with a limited budget. We already had tech that partnered, in us, so that gave us credibility to the street and also to South 32. And I think about the why now. There's 3 rules I have about doing any kind of deal, and Steve and I have gone over these rules. The first one's no asset level deal, especially as something at NAC that I think has so much more upside that we've improved so far. The second is no warrants. For us, if you want the 19.9, take the 19.9. Let's not do a 15 with a with a 2-year, 5-year, whatever warrant, at an X percentage above our price. Let's get that money in the till right now. And they're getting rid of the warrants essentially get rid of any kind of, glass ceiling for investors. And I think the last ones, I think probably actually the most important one that goes along with no asset level deals, no right of first refusal. I worked at I Am Gold in corporate development, and the number one rule that we had is we didn't ever look at a company or a project that had a ROFR attached to it, because the bottleneck for these big companies right now is people, not money. So to spend 6 months of your time trying to decide whether or not you want to make a $500 million, $1 billion investment to just have it be trumped by another major company that has a ROFR, it's just not worth it. So if you have a ROFR on your company or your asset, I think it keeps most companies from ever looking at you. So again, it takes away some of that blue sky. So those are the three rules we had, and they're willing to do a deal with no ROFR, no warrants, and an equity style corporate deal. And obviously we leveraged tech when we were negotiating that. That's where we started our foundation with our deal with tech, and they agreed. And what we told South 32, as we tell any company, and trust me, South 32 wasn't the first one that wanted to make a deal with us. They're just the second one that were actually agreeing to those three terms I said before. I said, this is how we treat tech. They've been honorable partners. They came in there when nobody else had known or invested in us. And the way that we treat tech is how we're going to treat you. So we're not going to pull the carpet from under tech's feet and give you guys a ROFR or something that we didn't offer them. And they agreed to it. They obviously agreed to, they wanted a few extra things, which we gave them, which tech never asked for. And obviously our valuation is a lot different. So you giving us $29 million of cash, we're willing to give in a little bit of things. And one of the major ones was the right to a board seat. And you mentioned they don't have a board seat, but they have the right to have a board seat. And guess what? If you give us $29 million, you can have it. And I guess the big question about, the timing, we're very confident that our assets will be good, but we still don't know. It's like a bit of flipping a coin. And we don't know what the macro is going to be when we come out with those assays. And a bird in the hand is worth two in the bush. So we decided to take their money and run. And I think for the most part, you are diluting yourself by 20%, but it takes away, again, another glass ceiling. Because if you did come out with these banging holes, then again, the market would start saying, hey, you guys only have $8 million. You need to do another raise to get to 20 million. So you'd be kind of stopped a bit from your upward swing just from people knowing you have to do the raise. So there's always a bit of a give and a take. And have South 32 come in. It's not like we did a normal, investor private placement with warrants and stuff. This is with a credible party that has a track record of doing equity investments and taking out those companies before in areas that own metals or mining, whatever it was called. I think 3 or 4 or 5 years ago with the Taylor deposit. And I always call it dilution without dilution. You're diluting shares, but these guys are holding on to those shares for the long term, for hopefully that liquidity event. So everything kind of worked out. And for them, I don't really want to speak for South 32, but I guess I'll guess why they did it when they did it. They really liked what they saw on the visual side. I think NAC was their number one target for Canada. They love copper. They love North America. I think if you want to be in the copper business, for me, you're looking at mines that, properties aren't going to become a mine for 5, 10, 15 years. So I think there's really only three jurisdictions to be. It's Canada, US, or Australia. Because I know where copper is going to go. It's going to be a lot higher than it is now, but I think it's too risky trying to deal with the geopolitical risk in some of these other countries, even in South America or Africa. So they're really eager to come in. I think what they thought is, they'll take a risk because, if they waited till our, assays came out, they might have to be in line with, the Rio Tintos, the Freeports, the BHPs in the world. And doing that bet on visuals, they were our preferred partner, and the timing worked out. And that's kind of the genesis and kind of how our kind of deal happened. And we're thrilled with it. We think it's a dynamic deal. It's wonderful for both sides. And a good deal is a deal that works out for both parties. So we got what we wanted. South 32 got what they wanted. And we're going to close any day.
There's one thing that Stephen often says, and that's it. If you like the deal, take it and shut up. And it seems like you like that deal. And it's interesting when you say, one bird in the hand is two in the bush. When I say why now, I'm mostly referring to the stage at which American Eagle is today. And I want to talk about some of the other things that you mentioned there. So we're going to touch upon how BC is changing and why South 32 is going, because they're not the only one, Freeport and so on. So we'll touch upon all these things, but when I'm specifically referring to American Ego, the stage at which the company is, as in, isn't it too early in your journey, given the upside potential that you often highlight, to give away almost 1/5 of the company, even though, a bird in the hand is two in the bush?
I don't think so. Look, we only had about $8 million in the bank. I think the market would have known we'd have to do at least a, $10 to $20 million exploration program next year. So we'd have to do another raise. It's hard to do a good raise, giving away 5 to 10% of your property without giving away a lot of other stuff. And, I'm talking about, discount to the current price, warrants, etc. And I think the key, I think people forget is the ROFR. So not having that ROFR, even though you have two companies in your registry, it doesn't keep out a third or fourth company coming in, or someone to actually take you out down the line. So I think doing this deal allows more investors globally to know about you, more companies globally to know about you, and it keeps all the blue sky intact. And what I always try and do is make sure that we have enough money for 1, 2 years of exploration programs, because I think as much as retail and the average investor, not the sharpest on their geology side, which rightfully so. You got to take 4 years, 8 years sometimes of school to understand it. They're really sharp and quick studies on the equity side. And if they know a raise is coming on, they're just going to sell you. And I've talked about this before. I was invested in a company. They're located in Chile. They actually had half decent results, and then they waited till the last minute to do a raise. Never ended up doing one. And their stock went from 15 cents when they went public. It hit 45 cents. And guess what? They're trading at a penny and a half right now. So, taking care of your capital side and your balance sheet is the most important thing. And it gives you a clear runway to actually make those discoveries that, allow the equity to kind of look after itself.
Hmm. The tech has a ROFR though, don't they?
No ROFR.
No
So
ROFR on tech either?
our
Okay,
deals are, no asset level, no ROFRs, no warrants. The
nice.
same approach we had with tech, we had with South 32. And these deals take a long time. So when you saw that deal, what it ended up coming out, like that changed over the time that we're actually talking. So we're
Hmm.
pretty happy, or very, very happy with the deal that we got.
Because I was wondering if this, where I'm coming from, why I asked you to confirm whether they have a ROFR or not, Tony, is because I'm wondering if this could create internal friction between tech and South 32, given the difference in their corporate culture to begin with. And I suppose they had a meeting first, the two of them, or didn't? Like, how's that relationship going?
Nobody knew about this deal before we announced it. I think we're pretty proud of how tight we keep information. And I think there's maybe 3 people that knew this deal was going to happen. I can't speak for South 32, but they keep a pretty tight ship as well. And the very first call we had once we signed the subscription agreements was I called Tech up personally. And then after I called Tech, I sent them the news release ahead of time, and they saw it on the news. But they've been really good partners of ours, so we just want to make sure that they were kept in the loop, explain why we did the deal when we did it. And for the most part, Tech is a shareholder. We want to do deals that are the best for our shareholders. And doing a deal with another major company that's not going to sell off your shares, that keeps intact a lot of that blue sky, is good for shareholders. And guess what? Tech's our biggest shareholder. So I think they understood why we did it. They've about 8, 9x their investment since they came in the very beginning in April 2023. So I think from a shareholder perspective, they're very, very happy. And in terms of two cultures, sure, they're different cultures, but they're both very great places to work at. You look at techs, look at people that work at tech. They've all worked there for 20 and 30 years. They're proud of the province that they're based out of. They're really great people to get along with. And South 32, also really amazing people. Slightly different. Like a lot of the guys I was dealing with there, and girls, very young culture. They knew our company or property inside and out. So I'm excited to work with them on a technical standpoint too. So it doesn't create, negative tension. I think it creates competitive tension, but that's really good for shareholders. And I'll bring it back to the book, The Big Score, which I think maybe Stephen gave you. It's a story of Robert Friedland. He discovered, Voisey's Bay. It was called Diamond Fields. He brought in Inco and he brought in Falconbridge, both on equity deals. And he created that competitive tension. And what it does, it allows a lot of other investors to know that your company exists. It gives it credibility, and it kind of fast tracks the inevitable potential liquidity event. So, they'll both be fighting over us, and guess what? Maybe another company will be looking at us too. So there's a strategy of why we did it. And obviously both these companies, Tech and South32, they do have certain information rights that other companies don't have. They have access to our data rooms. So I think they're both in a very good position.
Yeah, I actually had to buy the big score for myself, and it was like $200, which is actually crazy for a book. Although I did try to get it off of Stephen, but he wouldn't give away his copy. No, I'm kidding. I think he already gave it away to someone else. But
Might be me.
What's that?
Might be in my basement somewhere.
Well, good. You should keep it. It's going up in value almost as quickly as your stock. Tech has had you gave them 5 business days to participate when you called them up, I think. So from the 11th, it's now 2 weeks since then almost. So they didn't. Why not? What did they tell you when you called them up?
Yeah, so they got 5 businesses as the 11th. 11th Remembrance Day, and that's a holiday in BC. So technically they got 6. Look, I think we maybe cut off our nose for our face, but we did such a good structured shareholder deal, for the market that, like I mentioned, their shareholder, it was really strong for shareholders. And the fact that we didn't have a ROFR, I think for them, given that they only had 5 business days to match, and then we didn't offer them a 19.9 for them, if I put my feet in their shoes, what's the difference if you have a 15.2 versus a 12.3% ownership? If that other side, still doesn't have a ROFR and you're not offered a 19.9 to be on the same level as South32. Look, I didn't want to start, you obviously get critiqued from both ends, and people think, why did you dilute so much? On the other end, it's, why do you offer, Tech 19.9? That'd be issuing another 15 million shares. I think we have the runway to actually bring this thing to the finish line with the almost $40 million that we have in the bank. And I think that then do everyone knows they had the right to maintain, but to do the second deal with a 19.9 top up, I think it just completely shocked the market. The market obviously liked the deal that we currently had, and Tech decided not to maintain, and we respect the decision. So it is what it is. We move on, and they'll be watching us very, very closely.
It's also, again, not like you needed more money. So I think in a way, maybe that comes as a welcome thing, because you don't want to do too much equity level dilution either. But you clearly like this deal, and you're not the only one who does. By the way, the market liked it, as well, at least from my perspective, because again, it's a rather large financing. Yet the share price didn't drop too much. I think overall you're trading 3 times higher than you were at the beginning of this year. So the stock price has done well. There have been alternative opinions, though, and one that caught my eye specifically came from Dr. Nicole Adshead-Bell, who provided pushback on the exploration development landscape in BC, specifically focusing on, her argument was really built on a couple of things, but one of it was First Nations and government in BC being increasingly difficult to deal with. And so she said, great deal for American Eagle. I don't understand why South32 took that deal, though. I don't know if you saw it. I think she did it on an interview with Kitco Mining, so shout out to them or whoever it might have been with. But what do you think of her argument there, where she says, I don't get why South32 is doing this deal, because the BC government, very hard to deal with, and then there's the First Nation issues on top of that.
Look, everyone's entitled to their own opinion, and thanks to Dr. Nicole for giving us a shout out for liking our side of the deal. But I never heard of Dr. Nicole Bell Adshead before this. I actually recognized the last name, and I thought it was kind of funny because Neil Adshead, who's her husband, who we've met before, he actually works for Centerra. He actually works for Commodity Discovery Funds as well, but he works for Centerra, handling their investments. So it's funny because Centerra has invested in other BC juniors, Kestrel Gold. Shout out to Bernie Kraft. As well, Centerra's, they play very heavily in British Columbia. They got the Mount Milligan mine. They got the Kemess Underground that they bought years ago, I believe, from Orico. So I think that'd make for a kind of an interesting dinner table conversation. Why are you messing with BC? And that's kind of the work that her husband does. Also, Nicole's, a BC advisory firm she works for or runs. So I don't know. Sometimes I guess you just need hot topics. 10 different people sent me that video, so I guess mission accomplished. But I would just focus on Hot Chili that she's executive chairman for, which by the way is the same size as American Eagle Gold in market cap. In terms of the grade, maybe she doesn't know her property enough. We have two very high grade areas with limited drilling at NAC. I think our holes are better than any holes Hot Chili has pulled out of the ground. And if you look at they're based in Chile. I believe they're about 798 million tons at 0.45% copper equivalent. When this is all said and done, I think we'll have bigger scale and possibly bigger size and in BC. And if you want to talk about BC politics, again, if you're in BC, you're probably voting for whoever runs the province there, Neil and Nicole. But, as well, people aren't very educated on the First Nations part. Everything goes through the First Nations. Doesn't matter what your government is, federal, provincial. If the First Nations like it, it's going to work out. So it's all based on your relationship with the First Nations. 1.6 million different First Nations in Canada. There's over 600 different First Nations groups. That means 600 different types of governments. And within BC, over 1/3 of the First Nations groups are actually located in the province of BC. So every First Nation group is different. They've had a different past. They've had a different experience with people running mining companies. They're in different economic curves. Some of them have money, some of them don't. So you have to really understand where NAC is, what First Nations group you're working with, because they're all different. So I think if you want to make those comments, you got to do the research, which obviously I've done.
But essentially, and I did kind of to toot my own horn a little bit here, but I did a deep dive on BC with Kingfisher's Dustin Perry, who also operates in BC, early stage exploration company. And so for people wanting to know more about BC, maybe that's a good video to watch as well. But essentially what you're saying here is, because that kind of raised the issue maybe for people who are kind of far away from it and didn't know that might be an issue. But what you're saying here is you don't have an issue with government. You don't have an issue with First Nations. If you find what you're looking for, this thing can and will be in production.
I believe it will be. We have very good communication with the First Nations. The very first thing I did when we got this property was I called the Lake Babine Nation office, and I called them every day. And finally I got through, and I said, I'm Anthony Morrow. I run a company called American Eagle Gold. Don't ask me why it's called why it is, but we're now focused on BC, right in your backyard. But I don't want to be here unless you want us to be here, because we can find other projects. And I think just being upfront and communicating like that's made a big difference. And I've told people this in the past. It's you treat the relationship with the government, the First Nations, the same way you treat your family at home. The foundation of a good relationship is honesty and communication. And as long as we continue to communicate and we're honest about our approaches, I think we'll have a good pathway. So we're taking it step by step, but we meet with them as much as we can. I believe we had 5 or 6 members of Lake Babine Nation work for us. They're wonderful people. It's a wonderful area of the world. We've been there many times, and we see no problems right now.
She also said, and you touched upon this, and again, those are her words, I'm kind of paraphrasing here, but she said that BC porphyries are typically low grade and they will never get built in the current price environment, which is around, let's call it $4 copper. But apparently we have South32, Teck, Fortescue. There are other large companies who kind of disagree with her on that. What do you make of this? And do you have examples of where? Well, I know what you make of it, where you say yes, it does work, even if this is great. But you have examples of other places in the world where it's currently working at those grades at similar operating expenses to what you might have in BC.
Can't comment that too much because I didn't do the research to really give you a proper answer. But maybe next time we interview.
Sure.
I think she's right. I think she's not wrong. Most of these BC porphyries, they don't work within this current, price of copper. But, when this thing comes into production, think of how long it takes to actually do a drill out, pre-fees, fees, and come into production. You're dealing with a moving target. So where's the price of copper going to be then? Now, take into account, NAC is not your typical BC porphyry. It's atypical. And some of the holes that we've been hitting at NAC, and it's not one, it's not two, it's probably a dozen. They're better holes than most typical porphyries in British Columbia, comparable to stuff that's in the Golden Triangle, which, by the way, does work. So if you look at Galore Creek, that Teck is currently moving forward, they think that's going to be a mine in this current economic copper price. GT Gold's project Saddle was purchased by Newmont. Obviously, Red Chris is running, but we're still early days. We've just begun to scratch the surface in terms of the scale and our high grade. But we believe we have two areas right now of probably 75 to 100 million tons of anywhere from 0.6 to 1% copper equivalent forward-looking statement. Still have to do the drilling, but what we're seeing right now at NAC is atypical, and that's why we have not one but two major companies on our registry. And again, there's not many porphyries like us. There's really no other corporate companies like us with those two size of companies with that credibility that have invested this early stage. So I think we really do have something. And Tech is out there too, put their money where their mouth is.
You do have to drill it out, but again, you have the money to do that. $40 million. How much drilling does that buy? I guess it's over 50,000 meters, but you tell me.
Yeah, so $37 million in the bank. Thumbsuck, it was about 100,000 meters. What you
Oh,
have to
wow.
remember is so you look at charity flow through. If you do a normal investment, say at $1, if you do a charity flow through, you get about 60 cents back. So you have 1.6 to put in the ground, but you have to spend it within 2 calendar years. So if we did that right now in December, we'd only have 2025 to drill it. Now, what's different is just these hard dollars, which is what we got from South 32. It has no time constraints, so we can spend it wherever we want. And speaking of the government, BC government is actually great. They give you 30% back for every dollar that you put in geology or into the ground. So if we spend $1 next year at NAC, we actually get 30 cents back. So that $29 million over 4 years rolled over at 30% gives you about $41.5 to $42 million. If you did, let's say, all that money in charity flow through that $29 million, you'd actually have $45 million that you would have to spend next year. So the actual delta between charity flow through and hard dollars is very little. So all in all, I know we have about $37 million in the bank, but if you take the 30%, we have close to 50 million that we're able to spend and put in the ground. Not only to account for the money that we're actually making interest in the bank. So next year we'll make between $1 million and $2 million just interest. That'll cover our G&A, etc.
You might even be outperforming some of the money managers in our space, but that's maybe an interview for a different time. Per meter cost, if you have, let's round it up to 50 million, does that mean your average per meter cost will be $500? That's what it comes down to, right? If you're saying 100,000 meters, 100,000.
I think 100,000 based on $37 million. You're all in cost, and I'm talking drilling costs, geology, assays, camp, fuel is anywhere from 375 to 425, all in. If you're not using helicopter access, I don't believe we need to use helicopter access, so I just thumbsuck it at $400. So you just times whatever you have in the bank and divide by 400, and you get the number of meters that you can drill.
Has that dropped? Because I think some of the first holes you drilled were more expensive than that.
It dropped a little bit. So I think the first year that we drilled, because we just did a single rig program, and obviously some of your fixed costs go down the more that you're drilling, the more people you have at site. I think it was around 415 to 425 all in. And last year we had about 385 to 395 all in. And again, stuff like your geophysics, it blends into that cost as well. That's what we count our all sustaining. So I think a good rule of thumb in British Columbia, if you're in a good area like we are for infrastructure, you're not using helicopter support drilling, is $400 per meter drilled.
Okay. Yeah, that's fair. What about G&A? I mean, I know you're part of your group, so you guys typically, all the companies have a relatively low G&A. Do you expect it to go up this year or next year?
Not really. We're everything's pretty much going to be the same. You're spending G&A, your monthly burns, $75,000, $85,000 a month times 12, call it $1 million. This year we got about $25,000 to $30,000 back per month in interest. So we're spending about 700,000 all in on G&A, and next year with the interest we get in the bank, we'll actually be running at a surplus. So G&A is very low. We have really talented people that work at the OR group and then for American Eagle, but we split them with other companies. Our rent, our CFO, our legal, etc. And it really does make a difference, especially when you're at the early stage the American Eagle was, last year and the year before. Had we been not done that splitting with OR group, probably would have cost us an extra $500,000, $700,000. And guess what? That's the difference between making, hole 2317 and not making it. So it allows you to do that extra hole in the ground. And 2317 allowed us to increase our stock price from 25 cents to 82 cents in 6 months. It added a lot of market cap on there. And I think the only way, Antonio, to actually have sustainable, shareholder return is actually put as much of those dollars in your bank into the ground. And again, coming back to the G&A, that's why saving the money on the G&A is really, really, really important.
Yeah. Let's do talk about how exactly you're going to be putting that money into the ground. You have 100,000 meters that you could do, but that sounds like a lot. Is that realistically what you want to do with this money? Actually get 100,000 meters out of it, or are you starting off small? Or like, talk to me about that.
Not next year. Look, we're in a really great position. Everything I mentioned, great infrastructure, great location, two great partners, almost $40 million in the bank. But we wouldn't be the very first company to have $40 million in the bank. And a lot of those guys waste it. So we want to be very judicious with how we spend it. It took us a lot of hard work to get it. So what I'm really looking at is trying to extend that money we have over 3 seasons. And I want to average anywhere from 25,000 meters to 30,000 meters, have at least 3 rigs, and drill as long as we want. And you spread over 3 years. And I think over 3 years, we can drill, at least 75,000 meters. And I think we can get to where we want to get on the corporate level, proving out this project if what is there is there. So that's what we're going to do. And, I've told people before, this very well might possibly be our last raise. So 25,000 meters in the ground, $500,000 we're going to spend the off season. I think a lot of people want a penny pinch, not put this work that you can't necessarily market on the geology side. But when each of these holes costs anywhere from $200,000 to $400,000, you want to make sure you put that $400,000 hole in the very best place to not only prove the geology, but actually get you really good results to get your stock up, your value up, and your cost of capital down. So we're going to be putting in the proper work in the off season, probably do a little bit of geophysics work to try and see where this jewel box is, the high grade that we believe is underground. And then, during the drilling season, just drill, and drill until we have to stop.
Where is that jewel box? Is it South Zone, North Zone? There's many zones that you're talking about. Here you're talking about a blue sky donut, if I'm saying that correctly. Where is that jewel box if you had to guess now? And again, this is forward looking.
That's $1 billion question, Antonio. But if I were to guess, it's in the North Zone. What we started to hit in 33 and 35, I believe we're getting close to the jewel box. Just talked to another company and they said, we think these high grades actually come into surface as well. So some of the stuff we hit at depth on 35, we believe it kind of comes to surface further to the north, which, believe me, that's where 2 or even 3 of our rigs are going to be focusing at the beginning of next season. But anywhere from where 33 hit and 35 hits in the north, I believe the jewel box hiding somewhere underneath there. But that's not to say there can't be multiple jewel boxes on, the property. We did hit some really high grade zones in the south. We haven't really seen, the extent of it at depth either. So we're going to continue to drill. We don't leave the dance without the girl we went to the dance with. So we want to focus on the current mineralization, but, our big focus next year as well will be doing these big, large step outs to prove this scale and prove it's exciting for every major company in the world. And now that we actually, have that money, we won't be constrained by, any sort of budget. So where we see there's smoke, we're going to drill to see if there's actually fire there as well.
Mm. That's how you end up with 2 kids, though, not wanting to leave without the girl you want. What have you had? You do have some assays coming out soon. I hope they're from the South Zone, I believe. How important is the South Zone still? Because you say maybe the drill box is not necessarily there, but how important is the South Zone to your story right now?
The South Zone is what put us on the map in the beginning. It's why Teck invested in us. I believe it's going to be the very start of this mine, forward-looking statement, if it is a mine someday. We know we have high grade that is at surface. These mining companies, they want to look at it from an economic point of view. And the fact that we're located with great infrastructure and location, compared to something like Galore Creek, it's going to cost less than half the cost to, build our mine someday than it will be Galore Creek. And having this high grade at surface all of a sudden allows your capital payback to be a lot faster. So we know where the high grade zone is in the south. We just don't know the extent of how big it is. And with our whole 24, 28, and then 23, 17 from last season, we know it extends further than that circle that we show on the map. So it is a big focus. But I think a bigger focus next year will be in the North Zone That's where most of the assays remaining for the season are going to be coming from. It's why a lot of this recent excitement in our stock has happened. And, I think it's one of the big reasons why South 32 recently came in. So once this deal closes, rule of thumb, you don't put out assays or any other news until a deal is closed. But once the deal is closed, we'll start coming out with, more assays and trying to explain to the market, what we see and try to understand what our plan is for next year. But we have to wait for our assays to develop the model. In January, February, March, we'll be doing the same thing we did last year, which is educating the market, doing interviews with Neil Prouse and Charlie Gregg. I'll do interviews like this with you, but we like to kind of show the geology side. We want to show the macro high level side, so everyone else can make their own investment decisions for themselves.
I'd love to sit down with you and Neil again and have Charlie on, which I think the last time we didn't manage to do that. So next time we'll sit down, the four of us, and talk more specifically the geology. One last thing, though, about the geology. You mentioned that there might be mineralization around the periphery of the Babine stock. Is that still going to be a target? How much of a priority will that get? And what kind of mineralization are we talking about?
Well, first of all, there's definitely mineralization around the porphyry. The question is it economic mineralization? There has been some historical drilling there, not a lot, and very shallow, but definitely areas of smoke. So now that we have the budget, we're going to hit some long holes around that donut. Look, my plans kind of changed in the last 2 months. Now that we got this money in the bank, it's how can we drill and daylight a lot of this value that we think is there in the next 12 to 24 months before someone comes over the top and gives us an offer we can't refuse, as they say in The Godfather. So we are going to drill that out. We're going to prove it out, we hope. And I think the one really big unknown is this porphyry stock that we've always shown historically. What people have to realize, which we're just starting to understand on the geology side, is this is surface mapping, and there is some historical drilling there, albeit very shallow. But some of the holes that we hit towards the end of the season, going into this porphyry stock at depth, they started to hit, veins of bornite, chalcocite, stuff that we haven't ever hit before. And, if it's mineralized like that, is there some sort of drill box underneath it? Is there an area there that's more, economic? So it might not be a donut. It might just be, a giant ball or sphere. But, it's still early days. And one of our focuses, too, will be kind of drilling more into that porphyry stock as well as that quote unquote donut. Good name, bad name, I don't know, but people seem to remember what it's called.
I am probably going to get some heat for that, but I actually prefer donut holes over donuts. I'm just going to put it out there. Maybe that
They're
makes me a
called
bad person.
Timbits.
What are they
They're called
called?
Tim. They call them Timbits in Canada. So they're
Inbits?
little
T-I-N?
balls.
Oh, yeah.
TIM. So yeah, so like just quick history, the guy that founded Tim Hortons, his name was Tim Horton. He was a famous defenseman. He played for the Sabres and the Maple Leafs, retired when he was 45. He actually died driving home one day, but he started this franchise, got purchased by a person named Ron Joyce, and they turned it into this multi-billion-dollar franchise, which a lot of people from Canada may not know about. And people are absolutely religious about the coffee and the donuts, and they make these little small donuts called Timbits, and all the kids like them, and they're essentially just donut holes.
That's it. I just looked it up and I can see them on here. Maybe that's what you should call it. What is success, though, from the assays that are coming up right now? What would you deem success more specifically, as in size of the interval, but also size of the grade? What do you really want to see here, realistically, again?
I want to see share appreciation. I think to have, there's a lot of different investors. I guess the question is, what do they see as being successful? I think it's a bit of both. Obviously, we want to see scale. I think scale is what the big companies want to see, but you also want to see, really high grades. And I think that's what brings the retail in. And I got to work with, the funds and the big companies and the retail, make them both happy, get the price of the stock up, de-risk it so someone actually buys us out. But it's all this kind of just working with everyone all together. So I think the easy way out is just say, I want to see scale. I want to see grade. I want to see every hole to be good. I know that's not possible, but this knack has continued to surprise us. And sometimes where we don't think that there's mineralization, starts to see mineralization. And we drilled more north than we ever drilled before on the property. And we got this huge intercept in 35 and we hit it again at 38. So, If you start next season, just look at where 35 and 38 connected. We'll go straight down the jugular, right down to see how far this thing extends to depth, because there are no constraints currently at depth. So there's a lot of stuff to do next year, but I think 2025 is going to be our biggest program yet. It's going to show a lot of value.
I feel like you're already kind of answering this question that I want to ask here, but I'm naturally a cheapskate, I suppose, psychologically. So when I see a stock price that's gone up again, I think 3 times or something like that since the beginning of the year, much more since before that, especially knowing that I saw this thing at 2 cents right before you drilled your first hole, your discovery hole. How do you get investors over that threshold where they're like, oh, but it's gone up so much already. It's an over $100 million market cap. I missed it. It's too late. How do you get investors over that edge?
I think investors that think that way, you can't really get them over that hump. My
There's no hope for me.
my best and worst investment ever was on the same stock. So my best investment was buying Apple at $30 back in 2003, and I sold it for 100. And my worst investment ever was also selling it for 100, and I never bought it back. And I don't know where that stock is right now, because I think it split a couple times since. But I could never go back into Apple, and if I went back into Apple even 5 years later, I still would have made a lot of money. So it's hard to get over that kind of heuristic road bump. I think for us, it's just about having as many investors know about us as possible and realize that it's just natural. If someone makes a 5x or 10x, they're going to sell, which is fine. I don't blame them for that. The only way you actually make money in this business is if you sell too soon. But it's my job to make sure, other people that didn't invest can actually come in. And a lot of things I'm seeing right now, especially with this South 32 deal, is I'm seeing funds interested that I've never talked to before or never showed interest. So any retail that's kind of selling stock that are making their 5, 10x, now these funds, they can actually come in, because a lot of time with these funds, they can invest in you. For example, if you're over $50 million or $100 million, or maybe a dollar share price, and they don't really care about where you came from. They just want to be able to buy your stock. And if we get to a certain size, then all of a sudden, possibly some of these ETFs will start coming in as well. So you just want to work faster than the people that are selling and making sure you got that new money come in. And that's what we saw recently with the South 32 deal, and even before that, where our stock ran from 40 to 92 cents that it is today. I'm seeing a lot of these big funds kind of gobbling up these shares that usually would cause kind of a negative price reaction. So it's really good. So and the short answer is you can't do anything about it. But if you believe in the company, we took everyone 30x from 2 years ago almost today. Don't underestimate where we can take it right now. And Snowline was once a $10 million company, and people looking at it at 100 million thought they missed the boat. And guess what? Now it's $750 million. Same thing goes for NGEX, Philo as well. So a lot of people hold on to it. Some people sell, but you want more and more funds coming in. And now we're getting to a critical size that the big money is actually coming in, taking long-term investments and holding on.
I feel like this is almost personal because I had the exact same way of thinking on those 3 stories. So Snowline, NGEX, and Philo that just kept getting more expensive, and I kept thinking in the same way. You bring up a good point though, Tony, that I wanted to ask about funds calling up and getting in. I wanted to ask you if there's still room for more of that, because there's insider ownership, there's tech, there's South 32, there's other people who you and I know who are not selling in the open market anytime soon, making liquidity tighter and tighter and tighter. Is there enough liquidity for you to go out there and start marketing this new drill program and start getting, again, bigger names and funds in?
Yeah, certainly. There's about 50 million shares that aren't tightly held that can be traded at some point. So there's definitely room for funds to come in. Again, these funds aren't they're not trying to flip pennies. So for stocks at 92 cents, they want to come in and buy 2 million shares, and if they think the decision is right to do that, they're coming in because they think the stock's going to hit, $5, let's say. So they're happy if you're nice 2 cent share to all of a sudden, buy it up with a limit order and go to $1.05. So I think I think the price to come in on is a lot, less inelastic than the average retail for one. And there's definitely still enough shares out there. So 50 million of free float, they're not tightly held. Funds can get in. And again, people that are used to be there for the long term, a lot of them will have prices. So if they can make a 30, 40% gain in a couple of weeks, another fund wants to come in, there will be share attrition. So my worry is never that we don't have enough funds, enough shares outstanding.
Hmm. Good. I think we've been through a lot of it. I want to do that interview with you, Charlie, and Neil soon. What am I forgetting to ask you for now, though? What's important that you think we should be talking about, but I'm failing to bring up?
I think you hit all the points, Antonio. I think it's a great deal. Remember, we have two majors on our registry. Very few companies have that. Almost $40 million in the bank. We're going to drill, drill, and drill. And I think the one thing I want people to, realize, if they have any questions, feel free to contact me. Always happy to set up, meetings with our geos like to you, Antonio, but any retail out there that wants to talk to Neil and Charlie, they're one of the big reasons why we've had the success that we've had. Not only because they put the right drill holes in the right location, but we also give access to our investors. And I think a lot of people see me, but it's a Nate Smith, it's a Robertson's, a Royalty Antonio's like yourself, Charlie Gregg, David Hoax, Neil Proust, the people you don't see as much. And we're all on a team. We all want to do the same thing. And look, I just want to say thank you to all those guys out there and girls.
Yeah. Thank you so much for doing this as well. Are you going to, I remember you had, you were in the Core Shack at PDAC last year. Are you doing Core Shack this year? Are you bringing geology to PDAC?
Yeah, so I'm gonna be at Roundup first. I believe we have Core Shack there, and we'll have Core Shack again at PDAC. I'm doing a couple presentations there. Next board member, Kurt Breed, who works for Scotia now. I'm actually going to be doing a presentation about exotic kind of financings with majors, and they actually asked me to do that before they even knew the deal with South 32. So that should be a pretty interesting presentation. So yeah, we'll have two Core Shacks. Antonio, I gotta say, you are killing it online. People love you, and it's you got a guy like Mark Turner, he likes you, then everyone likes you. So that's amazing.
Thank you. Well, thank you so much for doing this, and I really am looking forward to future conversations, Tony.